On the 8th of May 1886, Dr. John Pemberton served the world's first Coca-Cola at Jacobs Pharmacy in Atlanta, Georgia. 3 years later, Asa Griggs Candler purchased the secret formula and brand before founding the Coca-Cola Company in 1889. Since then, the company has grown to a market cap of $250 billion and has become one of the world's most iconic brands. In this video, I'm going to discuss why there is still significant value in holding Coca-Cola in your long-term stock portfolio. Hi, my name is Nick, and this is the first of many in a series designed to provide an insightful look into the qualitative and quantitative qualities of strong businesses for long-term portfolios. Let's start with the qualitative side of the business. Coca-Cola's main competitive advantage is its branding. According to Forbes, as of 2020, Coca-Cola was ranked the sixth most valuable brand in the world, behind the likes of Apple, Google, Microsoft, Amazon, and Facebook, now known as Meta. This branding allows Coca-Cola to retain customers and develop significant customer loyalty, which enables them to overpower their competitors. To continue brand dominance, Coca-Cola has made and continues to make strategic acquisitions into strong products in which they can apply their branding expertise. Some examples of these include Sprite, Fanta, and Schweppes. What may come as a surprise is that Coca-Cola also owns significant brands in other beverage categories, such as Powerade and Costa Coffee. These acquisitions, paired with in-house innovations and an expertise in branding, enable Coca-Cola to continue to raise prices and grow revenues. World-renowned investor Warren Buffett is one of Coca-Cola's biggest fans and allegedly consumes 5 12-ounce bottles per day. Today, Buffett's Berkshire Hathaway owns 400 million shares in the company, giving them a 9.2% total stake. This stake will pay them $704 million in dividend payments this year alone, and will likely increase in the future as it has done for the last 60 straight years. Since Buffett's first purchase in 1988, the stock has generated a total return of over 5,810%. After factoring in reinvested dividends. During that same period, the S&P 500 has generated a total return of 1,450%. The following is a video of Buffett himself talking about his love for Coca-Cola and the immense power of their brand.
My grandfather had a grocery store, so I went to my grandfather and I said, how about giving me a deal on Coke so I can sell it around the neighborhood? And he sold me at the rate of 6 bottles for a quarter, and I went around and sold them for a nickel each. And I sold out every time. And I had no inventory, I had no receivables, I had the best business I ever had. But I made one mistake. I didn't put the money I saved into Coca-Cola stock. But I rectified that mistake some years later.
What excites you these days in technology, innovation, new businesses?
I like this one. I'm the kind of guy that likes to bet on sure things, Muhtar. And, since 1886 and Jacobs Pharmacy, you've just seen year after year after year till now you've got 1.8 billion, 8-ounce servings a day around the world. And when I joined the board in 1988, I don't remember the exact figure, it was a whole lot less. And you've got fewer shares outstanding now, and you've got way more per capitas, and you're gaining share around the world. So those are the kind of businesses I like. I like wonderful brands. You got to take care of them, but if you take care of a great brand, it's forever. And Those are the businesses I like. We own 400 million shares of Coca-Cola stock, as you know. We've never sold a share, and I wouldn't think of selling a share. I think, well, in my lifetime, since 1930, real GDP per capita in the United States has gone up 6 for 1. Think of that, 6 for 1 in one person's lifetime. We have not lost the secret sauce. So that's the kind of future I see ahead too. And if that's the future, you want to own businesses that are going to participate in that future. And we've done that for decades now at Berkshire Hathaway, and we'll continue to do it.
Management is another hugely important part of research required to undertake before investing into a company. At Coca-Cola, the management team is looking to continue innovating into new product lines and to adapt to new trends. This is evident in their recent advertisements involving the use of TikTok, the 2022 FIFA World Cup, and teenage video game culture. Moreover, Warren Buffett himself has a significant influence in the voting power of management due to his near 10% stake in the company. Now to the quantitative part of the video. Let's look at the company's stock. Year to date, Coca-Cola is down 8%, which is relatively strong when compared to the S&P 500's return over the same period. This shows the defensive capabilities of Coca-Cola and how institutional money views the survivability of the company in severe economic times. As you should all know, unless you've been living under a rock for the last year, the stock market has seen a significant crash in 2022, resulting in strong fear in the market. It's times like these that the words of Warren Buffett should be ringing in your ears. Be fearful when others are greedy, and be greedy when others are fearful. As investors, we need to be searching for value in companies that we know and love, instead of curling up in a ball, hoping that the worst is over. Now, if you take a look at Coca-Cola's price to sales over the past 5 years, you can see that it currently sits at just under 6. This means that if the company's revenues remain unchanged, it would take 6 years to make your money back in revenue, let alone profit. This is a moderately high value, especially for a mature company like Coca-Cola, who will find it increasingly difficult to grow revenues at significant rates. Now, before you switch the video off and decide not to invest, you need to be aware that the company is expected to grow at 5.36% per annum for the next 5 years. This does not include the dividend that the company pays, which currently sits at 3.11%, a large 12.5% higher than the sector median. Moreover, the 5-year yield on cost for Coca-Cola is 43% greater than the sector median. The reason for this dividend strength largely stems from the branding capabilities and consistent demand for products. As you can see from this graph, Coca-Cola has raised its dividend for the last 60 years in a row, which classifies it as a dividend king. I believe this is the true strength of the stock. Let's move on to the next piece of the puzzle and take a look at Coca-Cola's technicals. Now, this upward trend line here was a significant area of support for almost 6 months, and since it has been broken in mid-September, the stock has been incredibly weak. It has recently broken through the first area of support I have marked out on the chart in red, right around $57. Since then, the area has turned into resistance for the stock. Now, despite the stock being down 16.5%, I believe there is still some room for it to fall. If you are really desperate to get into Coca-Cola, you could start buying here, but I would like it to fall into the area of consolidation between about $55 and $52 per share. Now, when I say you could start buying now, I mean that if you wanted 100 shares of Coca-Cola, you could start with 1 share or half a share. You just need to start getting into the habit of buying stocks when the market is significantly down. However, because the momentum is so negative, it is still important to be mindful of the risks. Let's take a look at the volume profile for the stock over the past year. As you can see, volume peaks right in the middle of the range here at about $53.50 per share. This suggests that $53.50 per share is a crucial area of demand for the stock, and where I personally will be looking to start purchasing the stock more aggressively. If you guys like the video and are interested in more like this, please subscribe and leave a like. With earnings seasons just around the corner, stay excited, keep looking for deals, and keep learning. I will be here when earnings are released to update you on Coca-Cola's business and its technical analysis. Also, I must stress that this is not financial advice, it is merely my personal opinion. Good luck with your investments, and I'll see you next time.